Hey everybody, welcome back. Um, okay, after the Martin Luther King Day, we have had kind of a sideways move here within the markets themselves, but you can see us setting up a base. We're going to call this a low base for the time being, but I want you to pay special attention to a move back above that 20 period moving average. That breaks the 20, it breaks this channel, and then I want to start focusing more on this, maybe this flattening out here. We could be reaching maybe some sort of a very short-term bottom. I'm still hesitant to get too bullish on this market. It's real easy to get sucked into that, but you can see us kind of moving down through this channel here. A break of that one I think we're watching very closely then from the 20 to the 50 and then up into this dotted gray line I have here, which matches this one here. So from one channel to the next, and maybe some sort of a move up above that. I really like that idea and that potential there for the markets to then maybe see a bit of a short-term bounce, making this the bottom of a one, maybe some sort of a, I'm thinking 3 of 3, 4 of 3, 5 of 3. Then this was a 4-wave, this is a 5-wave type thing. So we'd have to get back up into this area to really confirm that, but at first glance, that's kind of what I'm seeing. So we're watching this here. 16.2 is your first move there. Otherwise, stay short and just let this thing kind of grind its way downwards. We had some volatile action over the last couple of days, but overall, as you can see in front of you, pretty much straight. So there's our move. This was actually Friday's candle, so it doesn't show Monday's candle. The futures show kind of an up and down type of action, but that of course starts to complete more of this Elliott wave that we're talking about. The futures do that work for us, even though it might not always show up on the cash charts. But this is still in that situation where we're maybe into a 1, 2, 3, 4, 5. And like I said, this could have been the bottom of 3 of 3, or sorry, 5 of 3. So this is 1, 2, this is all of a 3 wave, this is a 4, this is the 5. Now we're settling here into maybe a low base. We are holding tight to the 16,000. So I like that 16,000 short area with a 16.2 long. That's what I would be watching for over the next couple of days. You can see it kind of starting to maybe give us that rolling under effect here. So with this, it's 4,200 and 4,100. I think the NASDAQ is pretty well positioned here. With the gap up to 42 and the hold of 41, here's your 41 back here, and here's your 42 here. Now, break of 42, I love a close of this gap. That's only at about 42.75, but maybe a reach to 43 makes sense. So 42 does make sense from a long perspective if you want to try to catch a bounce. That's the place to start, I think, on the NASDAQ. Here's your daily, and you can see we held the 41 back here. We held it here, and then we held it again today with kind of that gap up, move down, hold type pattern by the end of the day. So 42, I think, could potentially start to give us a bit of a bounce. I'm not looking for maybe anything major, but that little bounce, I think, makes very good sense based on what we're seeing here out of today's action. So 41 short, 42 long. That also fits well with what we're seeing on the dailies and the weeklies. Here's your Russells. This one cannot make a new high. It just keeps bouncing down. With that, we kind of stopped today, hitting rock bottom, and then kind of, I shouldn't even say rock bottom because we might not be there yet, but hitting bottom here again and kind of trying to push our way up. If it can hold this 1 to 1,005, so 1,000 to 1,005 area right here, maybe we roll back over. This has been, look here, we've held and we've held and we've held. This 20 on a lot of the charts has been a great indicator for us on the way down here. That's why I'm looking for pops above it. If we can get above the 20 and hold that 20, should find some support and give us a short-term bounce. Until then, though, man, the Russells is just falling out. So we had give you an illustration here. The Dow was up about 27 points. The NASDAQ was up just about break even. The Russells, yeah, not so much, never mind. Down 1%. The Russells can't get out of its own way. It is really fumbling, bumbling, stumbling around down here. So this low base, looking for that thing to pop. I'd like a 10-10. 10-10 long, however, a 980 short. So the pattern's been down. It's easier to go short. You could, I like a short at 1,005 with a stop at 1,010. and maybe even adding to a bull or turning to a bull at 1010. But that's a good way to front run that shot. If you want to try a short at 1005 and then see if it'll turn around on you and come back down, you can put a stop at 1010, and I think you're pretty well protected up there then. And then here's your kind of push, 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 push. This thing just continues to wind its way down. Hard not to make this now into that 3 of 3 type move, and that's why I'm very, very cautious with the bull side of things, because these 3 of 3s just have a mind of their own. They just do what they want to do, and you can see it's very indicative here on a weekly. We had the 1, 2, and this thing has just continued to push itself downwards. Definitely more room to go. There's nothing in the indicators that show me that it has any reason to stop where it's at. So when I say short term, I am looking for maybe a few days of maybe bullish action. Maybe we can finish the week on an up type move, but then I'd be looking for it to roll over and head back down again. I just don't think we're done with this pattern. It doesn't look complete. Not at all. So any push to the upside, go ahead and play it, but I'm actually looking for maybe a roll around and then a push back down in the markets over the next week or 2 weeks or so. And then here's your SPX. 60-minute here also wandering sideways. This one finished break even on the day. But 1895 I think fits nicely. And I really like 1900. This here you can see kind of that 1, 2, 3, 4, 5. I think that could have been the bottom of a 3 wave. That's a subdivided 3 is what I'm looking at. So you have wave 1, wave 2, subdivide your 3. 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. So that's 3 wave. This was 4. This is 5. Now, if this plays into some sort of a finishing 5, then we just keep going up, down, up, down, up, down, never making new highs. But I like the 1900 area. If you want to try long in the SPX, that 1900 I think is fitting very nicely for that type of a look. If you want to front run at 1870 or even where we're at, if you want to take a shot at like 1890 to 1895 short, put your stop above 1900 and see if it'll stop, turn around, and create yet another low before creating a high. I don't see why not. Since we've done this, that's what we've seen. It has just refused to make a new high. So even if we push above 1900, I would be very careful in the 1920-ish range. I don't know if I see it much past 1935. Could see it stop and kind of roll around, and that just continues to give us that rolling under effect, but yet continues to make then new lows as well. So the shorter terms give us the rolling under. The longer terms still show that push to the downside, and that fits very nicely with what we're seeing in the larger term markets. To the downside, also look for some very good support sitting down here right around that 1850 to 1845 range, somewhere in this area here. Bottoming out with the bottom of this channel right here could give us at least an indication of the bottom of the 3 wave. With that, look for 4 to come back up into here with still a 5 down. I'll be hard pressed to think this is the bottom of the correction if that's what it is. And then I'll be looking for, of course, more bearish action. But these short-term bounces can turn out very nicely. They tend to be very vicious, very hard corrective moves, and they continue overnight. So if you can get in on one day and you're pretty convinced at the end of the day that you've got in on a bounce, you stay with it, and then the next day a lot of times it gaps up. And maybe you take profits at the beginning of the day, but overnight you usually get some help from the overnight markets where they'll continue to creep up. You open up to a nice another 8 to 15 point gap up, and you can make some nice money that way. But I wouldn't get too anxious to do that. I'm just saying if you feel comfortable that you found the bottom, take that. Otherwise, if we continue to break to new lows, it's 1845 to 1850 on the downside there. We're also starting to hit that support right back here in and around that 1870, 1860 range. That's where this thing all sits. Now remember, this is a monthly. We've still got a week or two yet to go before we finish the month. So we'll see if we can creep down below it, maybe pop back up by the end of the month. That fits very nicely with that whole idea of a short-term bottom being put in. So I don't know how that'll all play out, but watch for 1870 to maybe be a holding spot by the end of the month. To end our January, and then February, of course, we'll reevaluate. But that could then, if it's going to, maybe take us down into this first line here. Otherwise, if we see some sort of a vicious move upwards in the markets come February, this is then that bull flag. set on a monthly time frame, and then we get the hard push to the upside, which should then eventually actually take us above the 21 or back into the 2100 mark, if in fact this is just a B, C correction, and we're about to finish that up. The weekly as well down here holding this blue line. That's why I kind of like that 1870 aggressive move with that support sitting down here in this area, and that's that kind of 1850 here, 1845 to 1850 sits here. Below that it's 1825, and then way down here into the 1775 area. But you can see it's still kind of giving us that 1, 2, 3 type look. Now we're just resting here. If we get that short-term bounce, like I said, we can hold this, but I still like a rollover and a push back down below this line before this whole move is over with. Here's your goal. Not much to speak of here. I do like this thing long, but now I'm 1100 on the long side of it with maybe a 1, 2, 3 consolidation, 4 push up for 5. 1100 into 1110 followed by 1130 to 1135 on that. So if you're gold buggish on this, I like the break of the triangle. I like the hold of the triangle. If we get back below it, this turns out to be a bear flag. Do you see it? I didn't draw all the lines in so far this week. There's a bear flag happening right here. If that'll get back below about 1070, this could be a good short back down into some of these lower extremities here. We should bust this line as well and come back to revisit the low, if not break the low. But 1070 is that mark to be watching. Otherwise, 1100 long is not a bad shot as well for you long and short players. Here's your oil. This one here also has just continued to kind of bleed its way down, but I like the look of 1, 2, subdivide your 3, 1, 2, 3, 4, and this was a very extended 5 down here. The only other way I can make this into anything is this was wave 1, this was wave 2, this is wave 1 of 3, this is wave 2 of 3, and now you subdivide your 3 wave. 1 of 3 of 3, 2 of 3 of 3. This is working on 3 of 3 of 3. But as it is, this should be finding even a short-term bottom down here where we get a bounce. And that bounce should be some sort of a 4 wave. I still think we come back down to revisit the lows or break those lows. But once again, the bounce should be pretty vicious. If we don't correct from 38 to where we're at now, we should maybe even see a larger push of about a 20 points to work with on a fib retrace, which could put us into a $10 to $15 retracement in oil. And I think that might be stretching it a little bit, but $5, yeah, I don't think that's out of line at all. Back into 32 and even back to 35 makes good sense to me, and that's about a $3 to $5 move. So $5 wouldn't surprise me at all if and when we get that bounce. Right now, though, still continuing to bleed itself out. We did break some major support back here. Someone wrote and told me there's a target on this Head and Shoulders that it broke of about $10 in oil. Can you imagine $10 oil? Someone's gonna be killing themselves. Concerning like refineries and things. Even the big dogs, I would assume, get to a point where they start losing their butts too, and they've got to push oil prices back up. Now, I understand supply and demand is how it's supposed to work. I'm not always convinced that how it is work. People that have a lot of money, I think, can push things around, and I would not be surprised if it just happens every year. It seems that oil gets way down into these lower extremities, and we're like, "Wow, it's going to keep going," and then it turns around and just literally blasts its way for weeks at a time back to the upside. And all of a sudden, you're like, "Oh, there we go, $60 oil. Okay, not whatever." So I just, whether or not we'll get to $100 oil, I don't think so. But $50 oil, sure, I think that's well within the realm of the bounce coming into the springtime and everything else. But I'll add another line in here and we'll see if we can trace it down, but it's possible that we've hit a couple channel lines down here, and once we reach bottom, like I said, I think we're going to see a pretty sizable bounce out of oil here. It is flattening out a bit. It's just a matter of time. It's just a waiting game. Apple was down here about 50 cents as well, but you can kind of see it into that little same move as the other one. I like this as a 3 break of the gray coming back up here, back test for this was a 4, this was a 5, and then this could be doing that finishing 5 type move where you see this as a 3, 4, A, B, C, D, and back down for E type thing. If that's the case, Apple should be into a a bounce correction here pretty soon. We should not have to wait very long to see that happen. If that does, you're looking at 98 long into 100. And then above that, who knows where that could go? 104, 106. I don't know where it'll catch up. But 98 long to at least 100 and then play it from there. To the short side, below 96 and below 95, I think play nicely to the short side as we've kind of just hung around this 96 to 100 area now for about a week and a half. And it is more of a low base type of a look. However, if I Elliott wave this, I kind of like this is 1, this is 2. And then you work on that kind of subdivided 3 thing. So here's 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, and this is pounding out the last bit of a 5 of 3. And so with that, like I said, you get a nice bounce. That 100 and then above that, that 102 play very nicely. Sorry, 102 to 103 play very nicely for your overheads here, as this would then kind of fill this area back in here, back to the 20. It all makes really good sense. So Apple, I think, is nearing maybe something similar to that. But I don't think this is still the bottom of stuff. It could be. If you can catch a long in the markets or Apple, I'd say go for it. And if you can hang on and have the patience, let it run. It's possible that this is the bottom of some sort of a bull move, or sorry, bear flag type thing. Ugh, still got that wrong. It could be the bottom of a big bull flag, and if that's the case, we do pound our way up. So it puts in kind of this psych out move. 1, 2, 3, 4. Oh yeah, we've got one more move down, 5, and then we're going to bounce. And it doesn't happen. You get 1, 2, 3, 4, back down a little bit for 5, and then it ends up short, and then it goes wham to the upside. So I want to plant that seed in your head. I do like the bounces. If you catch a good bounce, whether it's the markets or Apple, and you can just have the fortitude for it, stay with it, because you don't know if it's going to reach the bottom again. It might come all the way back down, stop you out for nothing. But if the markets decide to do something crazy and fool everybody, we could see some pretty vicious buying come into the markets and run this sucker right back up again. So I'm not overly bullish yet, but I'm not avoiding the bull look either as we kind of approach the bottom. Now, I'm not giving you this bull idea based on something that I'm seeing in the markets outside of some potential Elliott wave counts. I see nothing necessarily in price. I see nothing in the indicators that would give me any reason to get mega bullish down here or start looking that way. I'm simply saying short-term bounce I think is coming. It helps reset some of the indicators, but then they roll back over and head back down. So with that, like I said, grain of sand here. And then back below 96, I like to the short side based on a target here then of this 90-91 area, kind of the test of the 200 here. That would help resolve some things. And then it also, as you see, starts to work on this bull flag that Apple might be in, but it just doesn't look done. Like 1, 2, 3, 4, 5, 4, back down for 5. I still like my idea that it's finishing up some sort of a 3-wave down. Then we get a nice bounce for 4, but it turns over and ultimately comes back down. So I'm still looking at that as the scenario after today's trading. All right, so with that, I think you kind of see where we're at. We had yesterday off, but not much changed, as you can see, as we just wandered around to the bottom side here. I like the rolling under effect that we're getting. Sometimes that does indicate a little bit of letting up in the selling department. If we get heavy shots to the downside, just ignore what I just said. That means bears are coming back in, and that would include a break of this. If we break this gray line down here, I do like it maybe pressing all the way back down into this channel line here before we see that next level of support kick in. All right, with that, I'll let you go. We'll give another day. We'll see you tomorrow night. Bye.